Hi, welcome everybody to Coleman Report Live. Hopefully everybody had a great Thanksgiving weekend. We had 4 days off and we're back at work. And welcome back Lance of Fountainhead and John Riosty of American Banker. And today we're going to talk about the hospitality industry and do some poll questions to promote our webinar on Wednesday, actually. So we're putting all the stats together, and we figured we'd give a little preview for today's show. So I'm Joseph Coleman. Bob is out today, but welcome everyone. Let's go to, this is Neville Rustamji. He's the president of the Hotel Brokers of America, and he's out of Colorado, and he was talking about the hoteliers and the financiers of those projects have been waiting for the first two quarters 2022 and really the summer travel months and all that stuff, but he's saying that they were hamstrung by inflation and rising gas prices. So my first question for John is you said you've been tracking the occupancy rates and give us an insight onto what's going on in the hotel. They've been patient for the last couple of years, very tough times during COVID, but maybe give us some insight on what you're reporting on. Well, what you're tracking.
At least through mid-year, through 2 quarters, occupancy looked very good. It was trending up over last year, and it was very close to the pre-pandemic level, 2019, of about 66%. Mid-year, it was just over 63%. And at that point, the projection for 2023 was just about 65%. So it would have been roughly 1% below the pre-pandemic high, but in line with pre-pandemic conditions. But as the quote you showed indicated, I guess there's been obviously economic changes and deterioration since then. Things cost more, including, as he said, airline fuel and including travel, and that impacts hotel occupancy. So the numbers aren't out for the 3rd quarter yet. It's only I guess they should be seen, or at least I haven't seen them. So I beg your pardon on that. But I wouldn't be at all surprised if there's some deterioration. Although end of year projections still indicate at least leisure travel being up over last year. So about 14 or 15%.
Yeah, I mean, and we did our BDO award event in Phoenix, and we had a wonderful time. But 2 out of the 10 attendees got COVID, so we're still dealing with that. Organizers like Jennifer Blumig of Eventfully Yours are putting out fires left and right with hotels. And Lance, what are you seeing with the financing side of from the lender's point of view? Is your hotel portfolio strong?
I think that every SBA lender likes to see the hotel industry perform well because the SBA 7A and 504 product traditionally have been a good way to finance a hotel property. And by it being weak, it lessens the number of opportunities for SBA loans. And of course, it causes a little stress in the SBA portfolio. The hotel industry is much like the restaurant. All of hospitality was recovering, and then that ugly word inflation started creeping in, and what it cost us. We were talking about Thanksgiving before the show, and John and Joe were both sharing stories of what turkeys and hams cost this year. And, everything we buy now, every time we go to the grocery store, go to the gas pump, it's taking a little extra money out of our pocket, which is providing a little less expendable income for travel. So I don't think you'll find an SBA lender that wants to see a pullback in the hotel industry because we all want those opportunities. And I think it's still very regional, meaning there's still some hotel markets that are real strong. That if an SBA lender pays close enough attention and does good due diligence, they can find opportunities. But it is stressed, and you're seeing some existing hotel borrowers struggle a little bit with it.
Well, let's run our first poll. Let's see what the industry wants to say about this. What is the biggest concern for next year? And I've added another one. I've added inflation to that. So what's your biggest concern? Airbnb, concerns of a recession, online travel agencies, new construction supply will outpace demand, or inflation? And I think we projected this pretty well. Yeah. 50% are saying recession, and the other half is saying inflation. So right on page with that quote from Mr. Rustamji. So.
And those two are pretty much tied together, guys. Recession is going to be caused by inflation and rising interest rates, but they're pretty much tied together.
Let's ask about RevPAR. This is we've included no clue in what is RevPAR. We'll take away that answer. It's revenue per available room. Is it increasing, decreasing in your market? 37% are saying increasing. So very good. I thought that would be flipped. I thought that'd be decreasing. So.
Well, and that's one of the great statistics, Joe, that'll be available in Wednesday's webinar.
Yeah. Let's talk about the secondary market. The hotel loan secondary market is stronger than ever. True or false? Yeah, it's a smart crowd. We are not the strongest ever. Premiums are down. What are you seeing, Lance, on the secondary market? Are you selling or are you holding right now?
Well, of course, we're a non-bank lender, so we do sell in the secondary market. I think right now where interest rates are, a lot of banks are probably, when they find that good opportunity in the hotel industry and do an SBA loan with it, they're probably keeping it in their portfolio.
Yeah. This is important for the nitty-gritty of the SBA requirements. Underwriters must know a brand's renovation requirements to properly underwrite a hotel loan.
Yeah, smart group.
Smart group, yeah.
Well, there's
right,
so many different industries, Joe, and John, that have those requirements. It may be 3-4 years down the road, and the hotel brand says you've got to completely renovate your property. So understanding those requirements are very key in underwriting the loan.
This is where you're going to help me and most of the audience out, Lance. SBA requires a 25% equity injection for hotel financing. True or false? This is very timely question.
And a very smart group.
Answer is false, correct? Yeah. But there's always a but with.
Well, the equity injection for hotel loans, of course, follow what the SOP states, which on a startup, your equity injection requirement is going to be 10%. That does not mean, as an individual financial institution, that you can't choose to require more. But business acquisition loans and startup loans require 10%. Basically, the SOP states your equity injection requirements are prudent lending other than those two circumstances, meaning you need to use similar analysis and similar equity injection requirements on a hotel SBA loan as you would a non-SBA hotel loan in your portfolio.
And our last one is a hotel might be financed 100% loan to value under SBA 7A. True or false? Let's see,
that's kind of a tricky question, Joe.
Yeah, that's a famous Bob Coleman trick question.
Yeah, somebody acquiring a hotel, the answer is no. Somebody starting a new hotel property, the answer is no. They both have the equity injection requirement. An existing hotel, you might be able, typically SBA is looking for an equity position, whether it's existing startup or business acquisition. You could look at a refinance by taking all available collateral, and if the hotel didn't appraise and provide good collateral coverage, technically you might be able to, but I don't recommend it.
Yeah, I think this is a trick question, a famous Bob Coleman trick question, where he says you might be able to do a GP, but be careful. So, anyways, go ahead, Liz.
I have seen properties where maybe the hotel property itself did not fully secure the loan, and they took personal and other assets to help meet the definition of fully secured. But in SBA lending, the SOP is pretty clear that lack of collateral is not a reason to turn down an SBA loan, that you just have to take all available collateral. So, I suppose you could do 100% LTV, but I don't recommend it.
I think our shameless plug is over. Sign up for Wednesday's webinar. We look forward to going through the 75-minute full discussion of all the top 10 lenders in hotel financing and 7 a.m. 504. So we're putting that together as we speak. But let's finish off with you, John. This is near and dear to your heart. Yes, the Office of Advocacy released this infographic, which is should be attached, and if not, then just send me an email about what veterans are doing when they finish their service and they're coming back. And this is the number of veteran employee firms by sector. Number one is professional services, construction. If you can't read that, again, I will be happy to send anyone this. But what do you think about this infographic, John? I know that you're a veteran, as we've talked about a lot in the past, but the SBA has always had a huge support for the veteran community, and I love this type of stuff. So,
I remember just when I was separating, they had from active duty, they had as you get closer, they give you some time to work on your resume and some assistance in that. But I remember I wasn't in a position to choose. I was taking the first job that was offered to me, and eventually I was lucky that American Banker came back and rehired me. But for a while in the interim, I took 2 other jobs, and it happened to be in the hospitality industry. So I think most service members, at least if you're in the, as I was, if you're an enlisted service member, you take the first thing that's offered to you. It's a little bit different in the officer pool. You have bigger and better choices. But I just hope all of these, sectors, all of the companies are at least open to recruiting veterans, because I think it's a great labor pool, and they have training and skills that can really offer things. Even if you're recruiting an infantryman, you think that there's not a lot that transfers, but there's always a lot of skills, intangible skills that transfer very well to civilian work.
Well, look at that. 2 million veterans-owned businesses, 5 million are employed. I mean, it's a huge community. And again, the SBA is a friend of the community.
Yes.
They go above and beyond for veterans, and we love to talk about this. This is one of the better topics to talk about. So again, go ahead.
Say real quick, it's not just the SBA; it's the SBA's lending partners as well. Because SBA couldn't do all that much, but I think the lending partners are very eager, especially when it comes to small business.
Well, and one of the things I would point out, SBA lenders should look for opportunities to add veterans to their team, because we have a veteran on our servicing team, and those organizational skills and leadership skills that he attained in the Army have transferred and made that individual an incredible servicing team member for us at Fountainhead.
Excellent, excellent, excellent stuff. Thank you, Lance. Thank you, John. Again, sign up today. Our hotel webinar's on Wednesday at 2 o'clock Eastern. We look forward to that. And if you have any questions about the content or anything, here are the email addresses. So, Lance, John, appreciate you joining in, and have a nice week. And we'll see everyone for Friday's Fraud Friday, again at 1 o'clock. Thank you for joining Coleman Report Live, and enjoy your week. Thank you.
Thank you.
Have a great day.
Thank you for joining us today for today's episode. If you like today's content, hit that subscribe button to subscribe to our channel and click that bell icon to get notified about our latest videos. Thank you again for joining us today and for supporting America's Main Street, one entrepreneur at a time. Catch you next time.